Welcome to the Uracan Resources presentation in the AGORACOM online Gold and Commodities Conference. I'm Greg Seaton, Chairman and CEO of Uracan. I'll be presenting our company to you today, as well as answering questions posted by investors who are watching the presentation at our scheduled time. If you're watching this presentation outside of our scheduled time, please post your questions, as we will be checking in over the next couple of days to answer them. Before I begin, I'd ask that all of you take the next 10 seconds to review our disclaimer, which you can review at any time by coming back to this slide. Very briefly, why Uracan? First of all, we're led by a very successful management team. We've had a number of past successes in the company that we will discuss in more detail later. We've got a resource, 40 million pounds and growing. We're focused on low-cost, near-surface exploration and development. We'll continue to upgrade our resource of 40 million pounds that we referred to before, and we've got year-round access to our project and great logistical support. Our corporate strategy is simple. We're creating shareholder value through discovery and development of our projects. In addition to our resource, we've had a number of high-grade discoveries, and we're going to continue to build on those. Ultimately, our goal will be to become a producer in Quebec. Very briefly, looking at the fundamentals of uranium business. They're excellent. The bottom line, demand exceeds supply, and we think will have a very positive impact on the price of uranium going forward. Looking briefly at our management team and board of directors, we've had a number of successes amongst our group. From Diamond Fields, which was sold for over $4 billion. Arequipa, sold for over $1 billion. Bema, sold for over $3 billion. The list goes on. We've also been involved in one of the past successful uranium companies, Eurasia. Clive Johnson and Tom Garrigan represent the past success of Bema, and Gord Keep from the Endeavour Group representing Eurasia. I think it's also worth noting a number of other successful companies that have developed the low-cost open-pit models. If you look at companies such as Forces and Bannerman, they have hundreds of millions of dollars market cap created on these models. One of the key differences, however, is that they're in Namibia, Africa. We are in Canada, security of title, and on top of that, in Quebec, top mining jurisdiction in the world. Bottom line conclusion is that low-grade, low-cost bulk tonnage deposits can be very profitable to mine. Looking briefly at our project, the North Shore project in Quebec. First of all, we have a resource of over 40 million pounds, 43,101, which we believe will continue to grow. We're intending to expand that resource early in the new year. On top of that, we've got a number of high-grade discoveries on our projects in Grand Roy and Costabel, from a couple pounds up to over 4 pounds. Very high-grade surface discoveries. In addition to that, we've got excellent infrastructure. We're very close to a provincial highway that goes through our project. We have access to year-round drilling. We are near the St. Lawrence Seaway, and therefore close proximity to deep-sea port. In addition, we've got inexpensive hydroelectric power. And finally, experienced labor pool is available in nearby towns in a mining jurisdiction. Our goal is to build a large project similar in style to the Rosing deposit, which is a Rio Tinto project and is one of the larger producers of uranium in the world. Looking at our SS and middle zone resource, as mentioned, it was over 40 million pounds and growing. It's our intention to have a new resource out in the new year. Looking at our area called SS and Costabel, you can see it divides up basically into two different claim groups, what we call the Turgeon claim group and Costabel. The Aeromag highlights broad, consistent mineralization. And you can see in the Costabel group, we've had multiple discoveries. You can also see the proximity to the highway, to the St. Lawrence Seaway, and to the power that I referred to before. I think it's also worth noting the size of our project. We've got over 1,000 square kilometers, and we own 100% interest in our project. zeroing in on our double S zone, what you can see from this slide 12 is the airborne radiometric shows the sort of stronger areas of uranium mineralization. You can see, focusing on the double S, a long trend. It's about 7 kilometers. It also identifies the different resource in areas such as the middle zone, TJ, Chan zone, and the AJ zone. Also, farther up in the northeast, you've got the Lac Petit zone, which is an area we intend to go back and work early in the new year, in addition to our Grand Roy, which is slightly farther up to the northeast. Speaking for a moment about our Grand Roy drilling, this was some of our highest grade discoveries found yet by our company. Very exciting. We've had intercepts of over 4 pounds in this area. And the important thing to note is that it is close proximity to double S, where our resource is over 40 million pounds. We hope to be back drilling amongst one of our earliest projects early in the new year on the Grand Roy area. Let's talk now about the Costabel area. This is one of our new high-grade areas that we've just recently announced. The thing to note here is that we've had multiple discoveries. As you can see from this slide, we highlighted exactly where those discoveries are. Also, it's worth noting that these are large anomalies, and again, it's an area that we intend to focus early in the new year. Let's talk now a little bit about our other project, Saskatchewan. The points to note here are, number one, we own 100% of it. Number two, it's a large area like Quebec. And I think it's also worth noting that Athabasca is the largest uranium-producing area in the world. Our project borders on the southeast border of the Athabasca Basin, an area called the Wollaston Domain, which hosts the basement rocks for the Athabasca region. And if you have a look at this map, you'll note, represented by the stars, there are a number of major uranium mines along the Wollaston Domain or along that southeast border. In addition, I think it's worth noting that we've also had a high-grade discovery of between 1 and 3 pounds on drill hole intercepts of almost 20 meters. Let's go over then a little bit about our 209 exploration year. We've had a very successful year. We intend to come out with a new resource early in the new year that will expand that 40 million pound resource. In addition to that, we've had a number of new high-grade discoveries in the areas Grand Roy and Costabel. And by high grade, when you can get at surface grades of 2 to 4 pounds, bottom line, it's exciting. Thus far, we've drilled over 53,000 meters, and we completed 6,000 this summer with the intention to be back drilling in January. And finally, our resource will be out early in the new year. What is the compelling investment opportunity in Uracan? Well, first of all, it's one of the largest uranium 43101 resources held by any Canadian junior. We continue to expand that resource of over 40 million pounds. On top of that, we've only explored a very small portion of our project, about 4% thus far in Quebec. So we've got a lot of blue sky opportunities. In addition to that, we've had high-grade discoveries in the last exploration program, which we intend to aggressively pursue early in the new year. And if you look at other successful open-pit, low-cost projects, there's perfect models that we intend to try and follow. One of the advantages we have, of course, being in Canada and Quebec. On top of that, we have our low-cost infrastructure around us, which I've mentioned before. All of that adds up to our belief that we can discover and build low-cost uranium mine. Briefly look at our share structure. As you can see, we have about 107 million shares outstanding. Additional shares represented at varying prices in our warrants and stock option plan. About 35 million shares for a total fully diluted number of about 143 million. This, however, would add considerably to our treasury. We've also recently completed a $5 million financing, giving us sufficient cash to carry out our exploration program Briefly look at our share structure. As you can see, we have about 107 million shares outstanding. Additional shares represented at varying prices in our warrants and stock option plan. About 35 million shares for a total fully diluted number of about 143 million. This, however, would add considerably to our treasury. We've also recently completed a $5 million financing, giving us sufficient cash to carry out our exploration program for the remaining year.